Still talking about inflation. September inflation did edge higher, still low, but starting to heat up. The latest data from the Philippine Statistics Authority shows a slight pickup in price pressures. All this comes just days before the Bangko Sentral ng Pilipinas is set to decide on monetary policy. With us now to discuss this inflation print and what it means for the markets and for monetary policy is Jonathan Ravelas, Senior Advisor at Reyes Tacandong. Hi, Jonas. Good morning.
Good morning, Mikey.
Okay, so inflation, the actual print came out 1.7%. Surprise to the downside, given that you expected 1.9%. What's your initial reaction to this, Jonas?
Well, basically, I think this actually raises the probability of a 25 basis point cut this October. So most likely, this gives more room for the BSP to just help support growth, and at the same time, inflation appears to be in check because given the expectation of 1.9, people were expecting faster food prices given the set of calamities. It was more of the transport sector that led the inflation. So this is something that appears to be manageable despite probably between now and year end as the Christmas season is here. Definitely there'll be some inflation pickup, but I think we'll end the year still below the 2% lower end of the central bank.
Yeah, so still below the 2 to 4% target range of the BSP. What exact figure do you think we'll end the year at for inflation, Jonas?
Most likely, on the average, most likely will probably end maybe 1.9%. Probably the year end or December inflation could probably be at maybe 1.8.
Okay, this opens the door for rate cuts by the BSP. The BSP is going to be meeting at the tail end of this week, about Thursday, to discuss monetary policy. What do you think they're going to do on Thursday, given the 1.7% September inflation print?
As I said, I'm looking at least 25 basis point cut. Again, this is against the what everybody expected to be a pause, but the 1.7 is a welcome number. So that could actually raise the probability of the 25 basis point cut.
And what next come December when they meet again? What do you think that, based on this current trajectory?
So basically, if we do a cut this this Thursday, then definitely that will be all for the year. We'll probably see how inflation will materialize for the fourth quarter. But most likely, if we end at 475, we could be probably looking at another 25 to 50 basis points in 2026.
Interesting. Yeah, the bigger picture is that inflation is well within the BSP's 2 to 4% target range. What does that tell you, Jonas, about price pressures as we head into 2026?
Well, basically, this could be, inflation could be on the rise again, especially sometime November. The high, the high base for rice would have ended, and this could actually mean again another potential rise for inflation. So for next year, I'm actually looking at slightly higher, between 2 to 3%.
Would you say this is safely within the BSP's Goldilocks zone? Not too hot, not too cold?
Definitely. I think it's there. It's actually a good level for business. And given the present situation is that this would be the lucrative time for business, especially those listed companies, to start their debt building, meaning they issue debt. No?
Okay. More broadly speaking, how do you see this data feeding into market sentiment, especially with the peso that's been under pressure as of late?
Well, basically, one thing to consider that despite the potential cuts that we're seeing, the Fed is also seen to cut by roughly 50 basis points this year. So that should at least really give us some elbow room. And given that they're in a shutdown, that actually lessens the pressure for the peso to weaken, so to speak, because of the jittery feeling in the U.S. However, what we saw in the Japanese yen shows the vulnerability of the Philippines relative to other issues, which are mostly political. Whether it's Thailand, Indonesia, the Philippines, or Japan, then any adjustments on the dollar will also be reflected to us. So you have to also remember that there's still that sword of Damocles, which is the tariff. So once those tariffs are finalized and we get to hear the Supreme Court confirm Trump's tariff, then definitely we're in for another currency adjustment.
We're at an 8-month low, mirroring the slide of other Asian currencies against the dollar. Where do you think the peso is going to finish this year, Jonas?
Oh, well, basically, given the trajectory of where we are, given all of this floodgate scandal, I think the risks at this point in time, I'm looking at a year end of around 58.90, which was my baseline since last year.
Okay, speaking of risks and that floodgate scandal that you mentioned, Jonas, Global Investment Bank Nomura says that all of this is going to weigh on economic growth. Where do you peg that at the end of the year as we finish 2025?
Well, basically, I guess what we can say is that the Philippine economy is on a holding pattern at this point in time. Given these issues slowing growth, then definitely we need to. This corruption scandal is clouding the outlook. The fundamentals are there. We have a resilient economy. Inflation is recovering. So hopefully things would uh, uh, pan out. And again, recently the president said that we will continue with infrastructure spending. We will make sure that everything will be accounted for. But we really need to do those reforms that arises from the present floodgate scandal, and we need to do the TAG. So that's transparency, accountability, and governance.
Yeah, absolutely. Thank you so much for your time this morning. Jonas Ravelas, Senior Advisor at Reyes Tacandong.
Thank you for having me.